Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I want to continue with the methodology in action. I have a lot of follow-up on that. Lately, as you know, I've been talking about my next 100 trades, and that'll make more sense in a minute if you're not familiar with that. I have a mystery chart, which could turn into my next big trade. We'll take a look at that in just 1 second. I want to follow up on some of the previous picks, and I also want to show you why I picked those ones. And of course, a little money management thrown in, and as usual, a little psychology too. Speaking of psychology, for mine to trade this week, I got to thinking about one question that you must ask yourself next week, and actually forever. And that'll make a lot of sense in a few minutes. Housekeeping, I do take requests. It makes my job a lot easier. If I can't fit them into this show, I can usually cover them in my weekly webinar, Dave Landry's Week of Charts, Thursday nights at 6 Central Daylight Time right now. Here's my Twitter handle. If you need to reach me, davelandry.com/contact. Also, if you want the slides from this presentation and all the other presentations, a spreadsheet to track your trades, all 3 of my books in PDF formats, plus limited access to my members area, go to davelandry.com/StockCharts and put your information in. All right, let's talk about the mystery charts, easy for me to say, and the methodology in action. As you know, I've been doing this next 100 trades project, and that was based on someone on social media saying, hey, I'm just showing the good trades. Well, I do show a lot of losing trades in this show, so I'm assuming he just watched the one show where I showed some good trades. And there's a lot more to be done with a winning trade than a losing trade. There's active management, there's trailing stops, taking partial profits, and a bunch of other things. With a losing trade, you just honor your stop. So I do tend to show more winners than losers, but that's mainly for that reason. So I said, well, fine, I'll show my next 100 trades in warts and all. And so we were off to a bit of a bumpy start. You'll see that that's beginning to improve just a little bit. I am showing a representative sample. I'm trying to basically represent a 100K account, and I will normalize some of those trades, meaning that I might adjust the share size up or down for tracking purposes. But right now I'm showing you the live trades, and as far as the way I'm putting on the trades, the number of shares that I'm actually putting on. But I'm not going to show you if I put on a trade in multiple accounts and things like that. So try to show you a representative sample, easy for me to say, of things that I've recommended. And most of these come straight from my trading service. For instance, this stock here, which is this week's mystery chart and my next big winner, hopefully. I know I just said hope. But this is a recommendation for today in my trading service from last night. Okay, let's take a look at this. So we're going to buy entry of 635, a stop of 495, IPT of 775. That's the initial profit target with a risk of $1.40. Now this is based on a hypothetical count size of 2% or $2,000 per trade. That's if stopped out. You don't buy $2,000 worth of this stock, okay? You would buy $2,000 divided by $1.40. Now that seems like a crazy stop, but that's what this stock is calling for. And when we look at the chart, you'll see that it really doesn't look like it's that far away from the price. So there's the entry. That's the protective stop, and the initial profit target is up here, actually a little bit higher than what I have shown. So let's take a look at why I picked this one for the setup for today. You can see that it did make a nice big picture cup and handle pattern. I don't trade directly off the cup and handle, but I like when some sort of big picture technical analysis dovetails in with my methodology. So in this case, it'd be a pattern I call a first thrust, but it's also a pattern I call a bow tie. Now notice this big wide range bar down after this really nice trend up. It ran up 200% and change from the lows, from around $3 to $6 and change, almost $7 a share. And you can see that it had a really hard sell-off here. This is a pattern I call a trend knockout because it knocks out the nervous longs and some longs in general, depending on how far it goes down. It also attracts some eager shorts. And if the stock turns right back up, you can take advantage of the predicament of these traders by buying in. So in other words, if it triggers an entry, as you saw in the prior slide, then those people who got knocked out have to think about whether or not they want back in. The bargain hunters who were looking to buy at a lower level are now forced to put up or shut up. And then In this case, it's probably not a whole lot of shorts given the price of the stock. But if there were any shorts, especially if they were brand new shorts, they would likely get stopped out as the trend begins to resume. Actually, with shorts can be a little obstinate because they often confuse the issue with facts and sell a stock just because it's high. So they might actually hang on a little bit longer and then eventually throw in the towel. And that buying to cover can really help exacerbate the move higher. And if you want to learn more about the TKOs, I have done shows on that. And of course, I have lots of stuff on the back end of my website. But I have done Trading Simplified shows if you want to get your feet wet on that. Now, here's a new trade for this week. I actually took this trade yesterday. It was a service recommendation. We have a bow tie here, as you can see, a nice thrust higher in addition to the bow tie, and a pullback. And there's also a little bit of a TKO, and we'll take a look at that in just 1 second. So we're going to look to buy 500 shares based on 100K, okay? 30.50, I think that's 26.50 for a stop, and 34.50, so it would be $4 risk. So yeah, this would be 26.50. Sorry about that writing in there. So this is what it looks like on a chart. Entry here, stop down here, initial profit target up here. Now let's take a look at what happened here. It took off and it came really close to that IPT. Now, I got in a little bit late, as you can see. It really made a fast move on the open. So this was not a cut and dry type of trade. Usually I tell everyone to pay attention on the open, and if they make a really fast move, then you got to make that really difficult go or no-go decision. But because I'm working on this project here, these 100 trades, and also I did recommend it to my service people, I went ahead and took the trade, even though I got in a little later. I kind of felt like it was a gift horse because it did come close to that IPT, but it backed off a little bit. So I didn't make as much as I intended, but just the way the stock was trading and beginning to come off its highs, I thought it was worth just going ahead and locking in loaded on half of that. Now, it's not a cut and dry discretionary trade. If I would have gotten in right around here, then by all means, yes, take partial profits as those partial profits are neared. In other words, apply a little bit of discretion. Now, as I said a second ago, it was a bow tie setup. So I put in the bow tie proper order, which is available with the ACP plugin. If you like this video, then like the video, and then you get the plugin for free. And if you don't like this video, then go have no fun somewhere else. I'm half kidding. So nice cup and handle, once again, combined with that bow tie. Also notice that we did have a slight TKO move. It doesn't look quite as impressive based on the scaling of the chart, but this was a decent little slide in here, which is also makes that TKO type of move. So I'll call it TKO-ish. TKO in general is for something in a bit of a longer term trend, although that's one I showed earlier as a mystery chart was in a nice little developing trend and had ran up over 100% or so. So TKO and something like that can work too. But it's also other patterns such as bow ties and first thrusts and those transitional patterns. Anyway, you can see at the bottom of the chart, this just tells you bow tie proper order. If the 10 is less than the 20 and 20 is less than 30, then it's red, and it counts the number of bars that it's been red. So you can see it was in a longer term downtrend. By the way, when an IPO comes public, don't touch it for at least 5 days. So if it comes public on Monday, the earliest you would look to buy it will be the close on Friday, and that's when the buy at B pattern could possibly set up. But that silly little rule, waiting 5 days, often can keep you out of a lot of trouble. This stock imploded, lost about half of its value. But now it's beginning to shape up. Sometimes IPOs come public and they're priced a little too high. And one thing I said in my IPO course was, price too high, they're going to die. And that seems to happen quite often. And that's why it's very important to wait those initial 5 days before getting into a trade. Now remember, by day 5, I mean you can enter on the close of day 5. Now let's take a look at Riot. Let's do an update on this. This was one from a while back. The original parameters were up here, 1,600 shares, entry of 7, stop of 575, IPT 825, and the risk comes to $1.25. Now, if you want to see these without any hindsight, at all. In other words, if you want to see them live, then you have to become a member of my trading service. However, if you're just learning how to trade, or if you're thinking about the trading service and want to see the way I think about stocks and the way I pick stocks, you can go to davelandry.com/archives, and you could actually watch the video from the 25th to see what I was thinking on that day. So I know I'm a little biased, but I think that's a wonderful education in and of itself, just having all those videos archived, and they go back many, 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 many years. Anyway, you can see it's rallied nicely since I recommended it. It did hit the initial profit target, as I said last week and weeks prior. With the money management, if you hit the initial profit target, you sell half your shares, and then you raise your stop to break even on the rest, so you end up with a bit of a free ride. Now, I got in a tiny bit late, and I sold a tiny bit early, and a lot of the actual things you have to deal with in the markets will come out. And for instance, the EMBC trade, and I'm going to kind of a spoiler alert, we'll talk a little bit about this when it comes to psychology, but that EMBC trade, one reason I was a tiny bit late was I was dealing with a lot of other things here personally, some stuff around the house, and also I just did a webinar with China. I had to wake up really early to do a webinar for those guys, and so I was kind of out of sync a little bit. No excuses, I know, and it's I was explaining to some of the guys in the Facebook group a couple days ago, it's like you really have to be on top of your game in so many ways. Now, once you get your stop up to break even, you're free rolling. Remember, we take off half of the share, so we only have a half a position left. But sometimes that can be plenty, like the ARLP example I talk about often. We got in that at $4.89, and I do show the actual trades on that one if you go back and look a few shows on the YouTube archives of these shows. Anyway, if you do take partial profits, you still have enough shares on longer term should the stock pan out and work nicely. Now, in this case, it did rally up nicely, and so we began to trail our trailing stop higher on that, and God forbid any overnight gaps. If we get stopped out, we'll get stopped out on a profit on the rest, and I hate to use the word hope, but hopefully we'll be in this trade for a long, 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 long time. Let's follow up on Verve, which was another recommendation from a trading service. And you can go back a couple of slides. Oh, there it is. There's the parameters on that one. 26 was the entry, 18 was the stop, 34 IPT, risk of 8. But Dave, that sounds like a lot of risk. Well, point-wise it is. But look, you're only buying 250 shares, because if you divide 2,000, okay, let's walk through this math real quick. $100,000 account value, 2%, okay, 2% of that is $2,000, all right, and you divide that by 8, it only comes to 250 shares in that particular case. Now, the reason the stop is so wide is that's what the stock calls for. This stock is extremely volatile. If you plot the Landry volatility with the ACP plugin, and I didn't invent that volatility indicator, they just named it that because it's the volatility I use. It's just plain old generic historical volatility. But anyway, if you plot that, you'll see the HV is well into the triple digits, which is pretty huge. But you can see that we did rally up to the IPT. So again, brought the stock to break even. And if you want to see those actual trades, you can go back in, either look at the archives for the trading service to see the recommendations, or if you want to see the actual trades, I do talk about these in the prior Trading Simplified shows. But anyway, stop to break even, and if it continues to move in our favor, we actually bumped the stop a little bit based on the last couple of days rally. And so far, it's not doing too well today, but it was positive right before I went live, so that's always a good thing, obviously. Let's follow up on KRON. So with Kron, another one of the recommendations, as you can see, in this case, we bought 2,000 shares. Why? Well, we're only risking 1 point. 1 point, okay, 2,000 divided by 1 point equals 2,000 shares. And by the way, if you want this spreadsheet, I'll give it to you. It's actually part of the package of stuff that I'll send you if you go to davelandry.com/StockCharts. So it's buried in there. It's growing and growing now. There's a lot of stuff in there if you dig through it all. Anyway, it rallied up. It came really, really close. I think it's like 1 cent from the IPT. In a case like this, I'd recommend you actually go ahead and take those partial profits. But it's since traded back down. Now it becomes a little tricky If you don't take the partial profits, our stop is actually a little bit lower in here because technically the methodology does not raise the stop to break even until and unless you hit the additional profit target. So how am I doing? Well, so far not so good. That was a few weeks back though, so we got to X through that. And last week was better, and this week was even better, even more better, I should say. So last week, you can see we were still in the black, but it was still in the red, but it was much better than it was the week before, coming back about $2,000 or so, if memory serves. But this week, we're actually in the black by a little, not enough to brag about, not enough to get too excited just yet, but so far, so good. You can see Verve doing some of the heavy lifting here, up 2,500, Riot, 2,500, 440 total on the cron, although we do have a little bit of a loss there. Ideally, I don't want to stop out at a loss on something where I've taken partial profits. And what else is happening? And, of course, a little bit on the EMBC. Now, a couple of random thoughts on my next 100 trades. I think last week I talked about the Heisenberg theory, or Heisenberg principle, when scientists were first able to start studying the quantum mechanics and quantum physics and the quantum particles or whatever. I'll show you how little I know, but I seem to have read somewhere that their observation of the particles moved the particles around because they're so tiny and so easily moved. So I have to worry about, or have to be concerned about that Heisenberg principle, whatever the case may be. For instance, on EMBC trade, in the back of my head, I was thinking, Dave, lock in some partial profits because you're going to record this show either today or tomorrow, Monday or Tuesday, and it'd be nice to show another winning trade. So that was sort of in the back of my mind there. So I do have to be careful about that and make sure I'm following the system to a T. Now, I don't want to go in and just take a little profit so I can show you a profit every week, because that has a dangerous characteristic to it. There's an old commodity adage for the floor traders: don't eat like a bird, defecate like an elephant. That means take little bitty gains, and then all of a sudden, whack, it's smashed with one big losing trade. Take huge losses and small gains. There are, by the way, a lot of very profitable, from a percentage standpoint, maybe as high as 90% trading systems out there that do just that: eat like a bird, defecate like an elephant. As I often joke, those type of systems, that'll work until they don't. Anyway, discretion is okay, though, when it comes to trades. Now, when I'm 1 cent away from an IPT, or a few cents away, or even a little bit further, if we got there pretty quickly, if we entered a swing trade, and within 3 or 4 days we're pretty close at an IPT, I'll go ahead and lock and load. And that's not where the real money is. The real money is at the second loaf of the trade. And if memory serves, I think I have about 20K open based on 100K account, 1,000 shares of ARLP, and that's 20K of open profits. And additionally, we only made 1,000 because that's where we take partial profits. We take half off. Remember, we're risking 2% or $2,000, so we're taking half off and making $1,000 at the IPT. But then we free roll and hopefully end up with a longer term gain. And that's where the real money is. And I'm very anxious to get to 1 or 2 of those big trades and have it posted here so I could show you that in my next 100 trades. Now, I can show you the one I'm still in, but that doesn't do you any good. But the new trades, obviously, will have zero hindsight and anything else in there. Now, if you want to look at those, if you want to look at like the ARLP and other things that are in the open portfolio, you can go to davelarner.com/archives. But I do want to show you new trades only for purposes of this presentation and project. Einstein versus Churchill. So one thing about whenever you start actual trading, okay, and you'll go through this Einstein's definition of insanity, where you feel like you're doing the same thing over and over and over and losing and expect a different outcome. And Churchill, on the other hand, he wants to define success as going from one failure to another without any loss of enthusiasm. So trading, especially trend trading, is a little bit of both. You have to be willing to give up open profits. You have to be willing to have some outright losses. You have to be willing to sit on your hands. In other words, you have to be really, really patient sometimes, and you also have to be prudent and disciplined. until you get to the really good trades and not lose hope in the meantime. But if you are losing, sometimes you have to make sure, again, you're not Einstein's definition of insanity. Now, the core methodology, which is based on trend following, doesn't work all the time, but it does work over time. Now, I did lay in bed a week or two ago on a Sunday night thinking about my Monday or Tuesday recordings for this show, and I did get a little nervous, like, well, I'm in a hole, Dave, and, I need to get out of this hole, and that's pretty ugly, and nobody's going to be impressed if I show a bunch of trades and lose a bunch of money. But fortunately, knock on wood, we're coming out of that hole quite nicely. In fact, we're out of the hole for now, at least, based on this project. All right, let's shift gears and talk about mind the trade. One thing I think about often, but I did wake up this morning and think about it, is how your life will spill over into your trading and how your trading will spill over into your life. And I think I'm going to follow up over the next few weeks on some of these things. But for today, let's talk about when you see a trade, and let's talk about what might be going on in your mind. Now, one thing is, do you have time to trade, or are you busy, or distracted? So like I just said a few minutes ago, I was pretty busy and distracted on Monday, and I nearly missed the trade. I got in late. It worked out, knock on wood, so far, so good. I probably would have done better had I not just got done with a webinar with the aforementioned Chinese investment forum and a lot of other things like that. I know someone who has a day job and now he wakes up early, trades E-minis, and then he goes to work. So he trades when he has time to trade as opposed to trading necessarily when he should trade. Now, you could also be thinking about your employees if you are a boss, your coworkers, or your boss. I have a good friend, and he's an immigrant, kind of an American success story. He's actually working to take his citizenship test, and I'm very impressed that he was asking me some of the questions, and luckily I knew the answers, but I think he was trying a little gotcha, because he's got to learn a lot about civics in order to become a citizen. But anyway, long story endless, saw him a few nights ago, and every time I ask him, because he owns about, I guess a half a dozen distributors or franchises for a pizza company, and I ask him all the time, how's the pizza business? And his answer is always the same. The pizza business is great. The people business sucks. So now I just ask him about the people business. So you might be dealing with some people business at work or at home. You could have an injury or illness. I've got something going on that I need to get checked out today. My ankle's been swollen for a couple of weeks. I know, getting old sucks. It's not for sissies. And so that's been kind of bothering me a little bit, and that could probably affect my trading. If you have a fight with your spouse, a significant other, or both, if you have both, you probably shouldn't be trading. But that certainly could cloud your judgment when it comes to trading. Have money, need money. This is what I talk about quite often. And Tom McClellan gave me the quote from his mother, Mary McClellan, and I've seen a lot of other people quote it too since. And basically it says, some traders trade when they have money, some traders trade when they need money, and others use more sophisticated methods. Now, anytime I go to take a break, the house, I used to have a guest house that I worked out of as my office, but now it's all one house, but there is only one door in and out of my office. So I kind of see it as going home, going to work. And my wife is home a lot. She has one big client, and she's either super busy with them or she's got almost the whole day off or whatever. And it just seems like every time I walk in the house to take a break, it's like she hits me with some sort of money problem. And it's like, okay, well, do I go try to trade to make that money? Do I want to take it out of trading? And it's like, well, hang on, Dave. What does that have to do with the actual trade? Are you hungry or are you full? And here's one thing that amazes me is as long as I've been at this, I'm still learning new things every day. And when I was a little bit more active in my intraday trading, I found that when I would walk in the office, a lot of times everything looked great, and I'd find myself making trades. And I call it the WITO. So I would put WITO in my notes, and then I would write, obviously, what trade I took. And then I realized when I was reading one of these behavioral finance books, and I forget who did the research, it's easy to just give Kahneman and Tversky, or I'm trying to think the other guy's name, but usually I think they've done most of the work when it comes to the behavioral finance. They sort of made the foundation for everyone. But anyway, they did a study, I think it was in Israel, about judges sentencing, and they were before lunch sentences and after lunch sentences. So if your judge was hungry or hangry, depends on how you want to look at it, your sentence was much worse than if he came back from lunch, had a nice full belly, was feeling pretty good, and then said, well, I'm not going to give you as bad of a sentence. So what I would encourage you to do next week for your homework, and then maybe every week thereafter, you need to ask yourself, what does this, have to do with this? And I'm going to have a lot of follow-up on this, and I also want to shift gears and talk about how your trading can also become a lot of this that has nothing to do with this. Well, that's all my time for this week. I want to thank everybody for watching. Any questions, you can reach me at davelearner.com/contact. If you want a bunch of information, davelearner.com/StockCharts. Get to know me first. So again, thanks for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.